Good Friday afternoon to you folks. I'm here in Command Central, and it is time to take our look at today's trading. I'm Pepper. This is Godly Trading, and let's get started. So, as with our usual procedure, I want to talk about this verse. I love this verse, and so often in trading, things can feel overwhelming. And this one came to me years ago when I was just didn't know what to do. And I love this prayer. Go read the entire chapter of 2 Chronicles 20. There's so many amazing principles in here for you in your trading. But this is King Jehoshaphat praying, "Oh God, will you not judge them? There's an army coming against them." He says, "For we have no power against this great multitude that's coming against us." Have you ever felt like you had no power against the market? That you had no power against the very forces inside your own brain? We admit we have no power against this great multitude coming against us, nor do we know what to do. You ever felt like that in your trading? I don't know what to do, right? I'm trying, it's not working. The market's just killing me. My own brain is killing me. Nothing seems to be working, and I don't know what to do. Well, here was the answer for them. But our eyes are on you. That's all it takes. One of the things that I've got a video coming out next week, one of the action items you can take, a quick win that you can get in your trading to start trading better is before you trade every single day, pray the simple prayer. God, help me for the next half hour, however long your trading session is. Help me to trade in a way that honors you and serves those around me. That was Solomon's prayer, and it can be yours as well. All right, let's jump into the calendar for the obviously nothing happening today. We got 27 minutes before the end of the trading week. Looking at Monday, what's going to happen Monday? And the good news is absolutely nothing. So nothing in the way for anybody to worry about for Monday morning, which is fantastic. So let's dive into the various strategies that we'll take a look at. This one has been this is Forest that trades on gold with an automated system. By the way, I do actually have, and I need to go into it. Maybe next week I can give a chance to go into. I've got an automated version for almost every one of my systems, and I've found an easier way of creating automated trading systems for automating your system. I think everyone should, in fact, take the time to automate your trading, even if you don't plan on, or I should say, everyone should take the time to create an algorithm, a trading EA, a trading bot, however you want to call it, a computer-based strategy for your system for the very purpose of simply testing it, backtesting. Backtesting is the foundation for everything that you do as a trader before you get started. But it can suck the life out of you if you're not careful. But so having it automated, it makes things so much easier. Anyway, and then you get the choice of, hey, if you're going to trade it or not. I don't have time to go into this today, but there's a reason I see that gray bar. That gray bar is, let's see, that is 5 o'clock, 6 o'clock my time. No, it's 6 hours, so it'd be 10 o'clock my time to 11:45. So 5 hours later would be 3:45, 2:45, 1:45. Excuse me, I can't do math in my head. Anyway. This is the period of time in which this particular algorithm takes its trades. And there's a reason that I only trade this trading window. So here's what I did. I was testing out, and by the way, guys, I'm here. So when time comes for me to go back to my charts, if I don't switch, somebody scream at me. So here's what I did with my automated system. I ran a back test on an entire year's worth. This is 15-minute chart. So I'm getting 300-400 trades, which is fantastic. It's what you want. And then I took the results. The results were not good. My initial run through of 15-minute chart trading gold using the Forest strategy didn't have a very good return. I thought, well, I wonder what would happen if I didn't trade it nonstop, but I only traded for certain time windows. So I simply took the data that I had and dropped it into ChatGPT. And yes, this is how I use AI in my trading. Part of it is, remember, AI is just an easier version of an Excel spreadsheet. That's all it is. AI is just an Excel spreadsheet that thinks for itself and can talk to you out loud. So I took all the data that I got from this test, I dropped it in ChatGPT, and I said this: find me or hour by hour what my return is based on the entry. So if I entered a trade at 1 a.m., what was the result of that trade? If I entered a trade at 2 a.m., so I did that. And lo and behold, when it sorted all of my results hour by hour, I found a time window where this strategy worked wonderful. And I found a time window where this strategy fell off a cliff. And so tweak, ended up with what you see here, or with what you see here. And it was that simple. All right. It doesn't work 24/7, but it does work during the Asian session. All right. Right after Tokyo opens up, before London opens up, that's its sweet spot. And it does its thing. So speaking of doing its thing, it didn't do anything today or yesterday or the day before. This strategy did not take a trade for the last 3 days. And that is perfectly fine. It's doing what it's supposed to do, only entering when the perfect setup shows itself. So not a lot happened with Forest this week, which is fine. I don't have a problem with that. I'll show you the overall results for this week. This is Bob. Bob had a tough week. Bob is having a tough week. Let's put it that way. Aussie yen, there's nothing to do there. See, we flipped red right here, and we're down below the green line, but it doesn't mean anything because we have to be down below the red line, and we're not. Now, by the way, if price comes down into no man's land, hangs out for a while, and then goes back up again, and this flips from red back to green, that would be a setup for me as it's called a continuation entry, or as the trend continues back to the upside. But that hasn't happened yet, so we're moving on. Aussie, Kiwi, we probably, I need to, this is my tracking trade. I need to think of this. It probably has hit its stop loss. Remember, this is the one that I missed. Still got to track it for record keeping purposes. Aussie US, nothing there. Swiss yen, we almost had a setup. Look at this. It almost fell below the red line, but it didn't. I mean, yesterday it almost fell below the red line, but it didn't. Actually, yesterday would have been the key. So if it had closed down here with this being red, that would have been an entry. Didn't happen. Didn't have it. Didn't happen. So it didn't enter. As simple as that. Follow your plan. That's all you got to do. Follow your plan. Euro pound, we're in. We hit. Hang on. No. Euro pound, we got in here. And let me get rid of the. So as not to confuse you, let me get rid of the zones here. Hang on. Let me get rid of supply and demand. There we go. So you can see we got in and it's pulled back. Okay, that's to be expected. We are bouncing off the bottom of a daily supply zone, and we're having a hard time punching through it. I don't care about daily supply zones. I'm aware of them, so I can prepare myself mentally, but I don't use them for decision making purposes. Euro yen. We talked about yesterday. This had gone too far, so I needed a pullback today. Well, we didn't have the pullback today. So this trade setup has expired. So I'm not even going to worry about looking at this one until we pull back up into here again. Pound Aussie, nothing there. Pound Swiss, nothing to do there. Pound yen, nothing to do there. Kiwi Swiss, nothing to do there. Actually, we're in this one for tracking purposes. And Kiwi yen, nothing to do there. All right. I'll probably put on a video, just record myself showing the other ones. I've got the other 17 pairs over here on the demo tracking, and I go through those once a week because I'm just tracking them to continue building my database, tracking them for journal purposes. I don't trade them every day because I don't need to. I can do it at the end of the week. This is part of my strategy to limit the amount of time that it takes me to trade. All right, let's look over at Frank, who's been our best performer in the month of February. Frank is currently, we're down $36 on this. Now, this morning I woke up and it was down $90. It'll turn around. So you can look at each one of them. I'm risking 0.5% per trade. So it's about $50. So you can see here the profit -7, 5, -16, 12. So you can see that there's nothing really that's in danger of going totally negative. Let's look at them on the chart. This is that simple strategy of one moving average and one candle formation. All right, whole moving average and an engulfing candle. That's all this strategy is. I love this strategy. Oil, Earl, we are struggling to pull up our chart here. I don't know why that's not coming up there, but you can see we got in on this one here, and now we're down here. I don't know why my long short trade didn't pop. There it is. Took it a minute. Here at home, because I'm at a different location the rest of the week. Here at home, I have Starlink, and I have trees overhead, which isn't good for Starlink. But it's wintertime, so they're deciduous trees. Aussie CAD, you can see we've pulled back. That's okay. We're still in this trade. These are swing trades. I'm expecting, and I have prepared myself, and I have designed the strategy to last for a long time. So if it takes a week, if it takes a month, that's okay. I'm collectively trying to get 2, 3, 4, 5%, not from any one particular trade, and certainly not from any one strategy. Euro Aussie, came all the way to about 80% of the way to take profit, and now it's pulled back. It's okay. Euro Kiwi, we're going back in the right direction. That's nice. Kiwi CAD, we're almost back to break even. Also nice. Kiwi Swiss, we're really sort of hanging around at this 1/3 drawdown. And Kiwi US, and this one is struggling to pull itself up, but you can see if we entered here, we're slightly positive. All right, real quick, we'll go through the rest of them. And remember, I'm just looking for the indicator arrows. I'm just looking for a green arrow underneath the candle or a red arrow above it. So I just flip through as quickly as anything pops up, and I'm looking for my indicator to indicate something. This is why I designed the system like this. So that an indicator, people say, well, indicators are lacking. Well, just design your system around that fact. And what this does, it just saves me time. This is a microwave oven. This is using an Excel spreadsheet instead of doing everything by hand. I answered all the questions about why is it doing what it's doing? Oh, is it supposed to be giving me this indicator? When I built it. And now I just trade it. And here we go, pound US. So what we'll have here, and I can show you, I've got time to show you. What we'll have here is we've got a trade set up on Frank. So the whole moving average is green. This is the 45. The 200 whole moving average, which is this down here, is also green. So we have a green light to go long, and we have our signal. All right, this is an engulfing candle. So here's how we set it up. We have our entry here at the high of the candle, and our stop loss is here at the low of the candle. Sometimes if there's a neighboring candle that's a little bit lower, I'll set the stop there. And then we set our exit at 1-to-1. So I'm going to do that right there. And I'll enter a trade live for you, about like that. So we're going to go with, what is this? Pound US over here on, now first thing I'm going to do is I'm going to look and see what do I have US-wise and what do I have pound-wise. I don't like to have too much risk on any one particular currency. So look for, there's a US pair, and there's a US. So there's not too much on US. So we're going to go with pound US, and it's going to be right here. This is Match Trader. I'm not thrilled with Match Trader, but it's what I have. So, and this is what my prop firm gave me, so that's what I have to use. So we're going in with a pending order. Let's make sure we have this thing set to daily. All right. And so the high of this candle is 1.36593, and that's our entry. We don't have to think about it. That's one of the things I love about this. 1.36593. That's our entry. Boom. Easy. What's our stop loss? The low of the candle. And you think about the logic behind that. Why is that your stop? Well, if price goes below the low of the candle, I'm not an uptrend anymore. I'm trying to be a trend trader here. I'm trying to enter into an uptrend. Well, if price puts in a brand new low, by definition, that's not an uptrend. That's what I love about this particular strategy. So the low of this candle is 1.36497. So my stop loss is going to be 1.36497. And then my take profit is just simply 1-to-1. Why is it 1-to-1? This is what this is how I'm doing it. I'm once I get to 100 trades on this, remember this is step 2 out of 3 steps. The third step being go trade it with your own money, put all the money behind it. The third step is trade it with a prop firm. Small amount of money. When I get to 100 trades, I'll evaluate. Was 1-to-1 the best option? Should I have gone, or could I go to 1.5-to-1? Maybe 2-to-1, that kind of a thing. But I'm not there yet. I stick to the process. And the process says 1-to-1. So is that 96 points? Is that all that is? All right, fine. 96 points it is. There's my take profit. I don't think it's all right. Something just happened. All right, hang on. Buy at 1.36593 is the high. Yep, 1.36593. The low is 1. Oh, I changed the low somehow or another. The low is 1.36. I'm sorry, 1.35904. 1.35904. Yep. All right. And then that is, here we go, at 689 points. All right. And now I just adjust my position. This is how you set your stop loss. This is how you manage risk. You pick your spot for getting out. Pick a spot for exiting your trade that makes sense to you. So that if your stop gets triggered, you go, oh, okay, sure. That's perfectly logical. I was wrong on the direction of the trade. We're going down, not up. So you pick the spot on the chart where you can say that to yourself. You don't want to say, oh, it was too small. Oh, it was too whatever. You want to be grateful that your stop loss got hit. So you can go, oh man, I'm glad I got out there because this thing fell off a cliff. And then whatever that distance is, you just change your position size to maintain your risk. So I risk one half of 1%, so 0.5%. So $50 on this account. So I'm just going to change my volume on this thing until this right here equals $50. Or as close to as I can get to it without going over, like Price is Right. So right now I'm risking $48.23 on this trade. Buy stop, send it, and it's done. Boom. There's you a brand new Frank trade. By the way, you might have any questions. Today's supposed to be an AMA. Ask me anything as I'm doing this. If you have any questions about anything at all, drop them in the chat. If you have any questions after on the replay, put them on the comments and I will respond and get back to you. If you want to email me, that's fine. All right, pound US, we have a pending trade on this now, so I'm gonna change the color on that, and we're just gonna keep on going down, looking for new entries. Although usually if there's a pound US, there's also a Euro US. I'm gonna circle back and see why there wasn't a Euro US. What does Euro US look like? Euro US is didn't have it. All right, so that's that. Take a quick look at our two forest trades. Have been hanging on for dear life. So CAD Swiss, and speak of Euro US, here's our Euro US trade. All right, we're done with Frank. Let's switch over to Forest. Remember, put any questions you might have in the chat, anything about anything. So Euro US is an open trade with Forest, and you can see where it's just not moving much at all. That's okay. That's swing trading. Your strategy, your trading should be as exciting as watching paint dry or like brushing your teeth. Thing you do. I dropped a video today. One of my favorite line from that video: trading is our activity, not our identity. It's just a thing we do. And CAD Swiss, CAD Swiss making some progress finally. We're about 2/3 of the way, so I'm thrilled about that. Look at some of these pending orders. Euro Swiss, probably not getting triggered. Pound Aussie, still probably not getting triggered. But who knows what's going to happen? Pound Swiss, they're all going in the opposite direction of getting triggered. US Swiss, okay, those are maybe ACB trades. All right, that's it on all the various strategies. Let me just take a quick look at the overall markets. People have asked me about that. What do I think about this? What do I think about that? Let me just go to the watch list and let's just look at the actual market itself. So today, this is the SPY, but it follows the S&P. Let me go to just my plain one here and turn off everything, but turn off my supply and demand zones. So it should be a pure empty chart. So SPY today, you can see we're just sort of bouncing back and forth in a range. Now look, from a trading perspective, you want a money maker. How do I draw a box? There we go. You want to have a money maker? Find a range. I think it was like 2 years ago, the NASDAQ. No, the triple Qs just bounced around inside of a range. The Russell. That's not the triple Qs. The Russell is the something else. Anyway, get to the bottom, you go long, get to the top, you go short. I mean, it's putting in a sideways consolidation. That's one of those. I tell people when we're teaching that you've got 2 to 3 directions. The price can go up or down or sideways. And most people either want to trend trade or counter trend trade. But range trading, ranges don't happen that often. And often you got to be, you're already inside of them before you realize that they have occurred. But they can be just a money printing machine if you can find one. I bet if we turned on our supply and demand zone, we would find that, there's a demand zone down there. There's no supply zone overhead. Anyway, so we keep bouncing off of 700. I don't know what that references. Let's just look at SPX, which is the actual S&P. S&P 500 on the CBOE. So we keep bouncing off. Now it's like 50,000, isn't it? Anyway, let's take a look at our commodities. Gold. Gold is slowly chugging its way upwards. If I was to, and look, we're bouncing outside of this little, this rather large demand zone with this little tiny supply zone. So yeah, if I wanted to trade gold on just a pure supply and demand, pure price action strategy, absolutely be going long right now. Whatever the price is right now, put your stop below, your stop down here at 4,600, perfect spot. Put your stop at 4,600. Your entry. See if you can get it on a little pullback on Monday to 5,000, and then your exit would be 5,400. There's a great 1-to-1 setup on gold. Silver. Silver is not doing the same thing as gold. Silver bounces around a whole lot more than gold does. Right now, silver is, anytime you have this big of a candle, it throws off all of your everything. So I wouldn't trade silver right now, to be honest, just because of this massive candle. And then oil. Oil is wanting to go up from a supply and demand standpoint. If oil could come down to 62 or even 61.50, yeah, I think 61.50 would be a perfect place to get in on oil going long. And then looking to get out around 65 and a half. I mean, that'd be a great trade on oil. 61.50 to 65, you have $4. Is that how math works? 65 down to 60, yeah, $4 on that with your stop loss down here somewhere in the around 60, maybe 59.50, something like that. Great trade on oil. And then let's look at Bitcoin. Whew, I hadn't seen Bitcoin in quite some time. But sorry for the stuttering. Bitcoin has come down to a demand zone, and look, it's already bounced off of it once. So Bitcoin bounced off of 60,000 was a sort of an emotional, important number for Bitcoin. So I'm not surprised to see it bouncing off of that. We broke through it for the first time back in, where is 60,000? What is this? Back in March of 2024. So it's been almost 2 years of way up and then coming way back down again. So I would not at all be surprised to see Bitcoin bouncing off of 60,000. And look, you got a great supply and demand zone down here, or demand zone to put your stop loss, somewhere around 55,000. So yeah, if I wanted to trade Bitcoin, by the way, I tell people who ask me about trading the different markets, when should I trade and all this and what's available for me. Picking that time frame is the most important element you can. If you watch today's video, it's in there. If you've only got an hour a day or half an hour a day to trade, what can you trade? What's open for you? Well, futures and Forex are open a lot, but they're not open the weekends. Bitcoin never sleeps. If you want to trade, if you want the ability to trade something 24 hours a day, 7 days a week, 365 days a year, Bitcoin never sleeps. Our crypto never sleeps. There's always a crypto market moving somewhere. So now you may have a long time getting down there, but yeah, 60,000. Let me go ahead and put a little trade thing there. So we'll check it next Friday. Somewhere around 60,000. We'll go 61 because I can't click that well. And we're going to come down to 55,000 as our stop. And we'll go, we got clear skies all the way up to, well, we won't be greedy. Let's go up to 75. So there's your trade on Bitcoin. Paulie says Bitcoin usually pulls back every third year. Well, Paulie, let's see. Hang on, can I scroll out to years worth? All right, 23. Let's go 22, and it pulled back on from 2023 to 2021. So yeah, pulled back on 2023, up, and then 2026 it's pulled back. Well, he's right, and in the 2 cycles that I have seen, I would agree with him 100%. We can only go back on TradingView to 2016. It peaked in it started in 2016, or TradingView's data goes to 2016. It peaked in 2021 and pulled back in 2020. Pulled back in 2020. So that'll be 3 years. And then 2023 cycle pulled back. Yep, sure did. And then 2026. So he says pulls back hard. So be wary of that. You know, what would probably not pull him back beyond 20,000. Talk about how much is it lost? And by the way, we're probably going to have to end on this because I have rambled on. But let's take a look measurement wise from where we were to where we are. That's 50%. Well, G Pepper from 120 down to 60. Yeah, even I can do that math. So 30%, I think, Paulie says. So yeah, but look, learn your market, just like Paulie just said. There's a pattern there. There's, again, one of the things in the video today, God has put patterns out there. Price hardly ever. In fact, if I could find my drawing tool, I think it's here. Where's my drawing? There we go. Price doesn't do this, right? We know that. Price does this. Woo! There are regular patterns. Matter of fact, the Fibonacci spiral is God's patterns. And so there are patterns out there. So find a market, learn your market, and understand when those patterns are happening. I have taken this same principle and applied it to my own trading. I know that somewhere around the 10th of every month, I'm going to hit my peak for that month. And if I can hit my target before I hit my peak, then I stop trading for the month. And then I hit a trough somewhere around the 20th of the month. And my hope is to get back to where I was before the end of the month. You know, God has patterns. God's fingerprints are everywhere, even in trading, even in Bitcoin. So that's it, guys. Thank you all for being here this week. I will be back on Monday with a brand new session. If you have any questions over the weekend, just drop them in the comment for this video. I'll try to answer them on Monday. Other than that, I'll see y'all next week.